If you're wondering what's ahead for our property markets for the balance of this year, there are clues in the news, and that's what Dr. Andrew Wilson and I discuss in this week's Property Insider Chat. We talk about the pause in interest rates. We have a discussion about what's happening to inflation, to our economy, and we go into depth in the rental markets around Australia and, of course, report the latest auction results. And putting all that together, there are some clues for what's ahead. So if you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Is this the end of interest rate hikes? Is inflation coming into control? What does all this mean for our property markets moving forward? These are common questions I'm getting from property investors at present, but there are clues in the news. So today I'd like to discuss many of the items you're probably reading in the news with Australia's leading independent housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Today we're going to talk about interest rates and the pause, what's really happening to our economy, what's happening with inflation, and we'll get an update on the rental markets around Australia. Hi, Andrew.
Yeah, good day, Michael. Another month, back-to-back pause in our official interest rates. Who would have believed it? Particularly given other jurisdictions seem to be raising rates at the moment. Well, not seem to be. They are raising rates at the moment. We're a bit of a non-conformist, Michael. Maybe the Reserve Bank governor wants to head out with everybody feeling a little better about things and hand over the hard stuff to the next governor. But yeah, look, it's good news considering we've still got a roaring economy and we've got a strengthening housing market. Yeah, good news for mortgage holders. Another pause.
Well, 3 of the 4 big banks now suggest there won't be any more interest rate rises. Only one bank's out of sync, the ANZ Bank, that believes there's going to be one more interest rate increase. But Andrew, we know how correct they've been with their forecasts in the past.
Yes, I'm not sure we should be listening to the banks, but anyway, that's their business. The business of interest rates and the housing market. You think they'd get it right, given the substantial exposure they have there. But let's hope for mortgagees' sake that they're right. Those 3 out of 4 are right. I'm not so sure. I still think that dark clouds are thereabouts, but this is good news. And I'm just hoping, Michael, that we haven't let inflation off the hook, by not keeping our foot on the neck of the dragon, because we do have some maybe clouds getting a little darker on the horizon just at the moment. But let's enjoy what we have at the moment and trust in the Reserve Bank for a change, perhaps, but 2 interest rate pauses. And as I said, though, the US, Eurozone areas are raising rates because they're still concerned about inflation. The latest US economic data has showed, again, a reduction in the number of jobs being created over July, which is sort of good news, but there was still nearly 200,000 jobs created, Michael, which is a big number. It's just not as big as it's been over the past few months or over the past year. But the concerning thing for the US is that wages increased again higher than predicted. Wage growth in the US is now pushing towards 4.5%, which is quite a strong result, and only adds fuel to necessity, I guess, of employers to have to increase their prices to cover those higher wages. And we're seeing that here. And I think that's what's concerning US policymakers going forward, and why we may see another interest rate increase in September when they meet again. But of course, there's a lot of data to come through between now and then. But at the moment, Australia is in pause mode. We've got a rip-roaring economy and a strengthening housing market.
Well, some people would question your comment about a rip-roaring economy, because there's no doubt that some people are hurting. Their budgets are tight at the moment. Their rents have gone up. Their mortgages have gone up. Wages haven't kept in tune with the rise of inflation. But when you look at what's happening to jobs, growth to unemployment, there's lots of areas of our economy that are still doing very well.
Yes, and I think the point is, Michael, you can't have it all, perhaps, that we have probably our strongest labour market in history. And of course, that means lots of demand, if that's an appropriate term, which fuels higher prices. And that's why we've got higher interest rates. I guess there's no such thing as a free lunch, but certainly the free lunch at the moment is all about record low unemployment rates, booming jobs growth, and falling unemployment levels. So whatever the stress, at least households have the opportunity to secure income in many different areas of the economy.
One of the factors the Reserve Bank would have taken into account in its decision to pause interest rates was the June inflation figure.
Yeah.
And it was lower, but it's still nowhere near where the Reserve Bank wants it at the moment, Andrew.
No, we've had, and I think that's, perhaps what's fueling the more optimistic position of the Reserve Bank in terms of where interest rates are. We saw headline inflation down to 5.4% from 5.6%. And the previous month, we saw a fall from 6.8 to 5.6%. And as we've mentioned here before, Michael, much of the headline inflation declines have come from a sharp decline in the international price of oil. And we're also seeing the increase in house building costs now reducing substantially, even though it's still high, over 10% a year. House building costs are still rising by, but it's half what it was a year ago. So that's what's helping to push headline inflation down. Not sure it's got a lot to do with interest rates, to be quite honest. The most significant contributors over June were housing and food. And housing, of course, is all about rental costs. And we'll look at the latest rent costs shortly, but we saw fuel falling. That's the outline for inflation figure for June, and that would have, the headline numbers would have encouraged the Reserve Bank to go and hold again. But when we do look at the price of oil, which, as I said, has been a significant factor in falling inflation, not falling, the rate of growth in falling, but we're now heading back over $80 US a barrel, Michael, and that's certainly an uptick in terms of the trend over the past few weeks. So we really need to watch that. Probably don't need to tell many people that, because they would have seen a higher fuel costs at the Bowser. I mean, petrol's now around about $2 a litre, I think, mostly everywhere. And that's just another product of the higher price of oil per barrel. And if this continues, it will fuel another outbreak in inflation.
Well, many people don't realise it's not just what you and I pay at the Bowser, but it's what transport costs are, and then that's translated to increased cost of goods getting to our shops, to our supermarkets, to our warehouses, and there's a flow-through effect, isn't there?
Yeah, and on top of higher wages, So just adding to costs, goods costs, where now we've got services costs rising at the highest rate. I hope we're not whistling in the wind in terms of victory over inflation here, because there's still a lot of issues out there. But at the moment, we can enjoy a respite, perhaps, from interest rate increases. But there's still, I think, some work to do. But the trend is positive in terms of downwards. And I think that's what the Reserve Bank has said in their statement, Michael, when they released their result for August. They still said that even though inflation was declining, it was still too high at 6%. Goods price inflation has eased, and that's really just an adjustment which would have happened anyway as a result of coming out of lockdown and COVID. But prices of services are now rising briskly, and that's all about wages chasing prices and prices chasing wages. And rent inflation is also a big problem, as we know, but not just here, but in other jurisdictions as well. The data suggests that the Reserve Bank feels that we will get back to that 2 to 3% target range within their forecast horizon. But that's just following the numbers, Michael, downwards. It's just tracking the trend. So they can use that as a justification, and they're happy because employment is continuing to grow. But of course, they've put in disclaimer, there are, although significant uncertainties, and that they may have to increase monetary policy again. That's the Reserve Bank's position in terms of inflation and their decision on interest rates over August. Of course, we also had retail sales data out, Michael, again, and that was for June, and it was down by 0.8% over the month, which was a fall as the same as the rise we had over May. So what we made over May, we lost over June, but we're still up over 4% over the year since June last year. So still spending away. I've just got some queries about this data, not just the seasonal adjustment modelling, which I think is questionable because of what's happened through lockdown, changing the weak months to strong months and strong months to weak months. The ABS said it blamed the result on weaker than usual spending on end of financial year sales, and the stronger result in May was from extra discounting and promotional activity. I'm just unaware of any real evidence for that, Michael, but nonetheless, it seems to be what the ABS is using to explain these erratic, I guess we could say, up and down numbers from month to month in periods where we would expect them to be going the other way. But the RBA can look at that falling retail sales data over June to justify the fact that interest rates are working? I'm not so sure.
Last week we spoke about our housing markets and how in the month of July prices moved up, not as much as earlier on in the cycle, but are still heading upwards. What's happening in our rental markets, Andrew?
No surprise with house prices, just even though still growing, not at the rate we had over June. It is that winter effect, Michael, but we know that there are other measures of housing market activity in regard to prices which are still quite strong, and that's the auction market particularly. We'll look at that shortly. But we did release our July home rent report, and after some respite for tenants over June, which we did expect because of the holiday distractions typically of June, where we did have higher vacancy rates and lower rents. Rents have resumed their upward trajectory again once we've moved into post-holiday period, with most capitals reporting higher weekly rents over July compared to June. Of course, this just reflects the chronic undersupply of rental properties that we have, Michael, just about everywhere. Sydney house rents up 2.3% over the month, Michael, now tracking just under $770 a week. That's 15% higher than a year ago. Melbourne continues to revive its house rents, up 1.3%. It's also up 17.6%, its house rents over the past year, but $200 a week less expensive than Sydney. Brisbane rents were flat, Adelaide up 1.8%, Perth was flat, Hobart up 1.9%, Darwin up 2.3%, and Canberra was flat. So overall, Michael, it was a breakout again, back to normal, I guess, in terms of what we're expecting with monthly rent rises. Vacancy rates are still tracking just about everywhere under 1%, which is just spectacularly low. And what's driving higher rents is that shortage of property, as the vacancy rate reveals. And vacancy rates were basically flat in most capitals over July, fell in Perth, lower in Perth and higher in Darwin. But the story really is that these vacancy rates are very low for houses, and that's what's driving higher rents, regardless of the shifts from month to month. Unit rents also showed a revival over the month, Michael, except for Sydney. Interesting, Michael, Sydney unit rents have been easing over the past few months. They peaked at $750 a week, but now they're back to $720 a week, which was another fall of 1% over the month. But Sydney rents are still up 30% over the year. Melbourne rents continue to rise. Unit rents 1.4% up over the month, 32% up over the year. Brisbane rents also continue to strengthen for units, 2.1% increase over the month and 26% increase over the year. And the smaller markets, Michael, Adelaide and Perth were flat over the month. Hobart and Darwin were down, and Canberra was also flat. So not a lot of joy there for tenants, unfortunately. Again, better news for landlords in terms of rents continuing to rise, but vacancy rates remain very, very low, Michael. And I don't think we have any real prospect of sustained good news for tenants.
Andrew, what I find interesting is how in Melbourne and Sydney in particular, unit rents have almost caught up to asking rents for houses.
Yes.
People often can't afford a house, so they move into units. Now, we understand that many of the houses are in the outer suburbs, and that'll bring down the overall rents compared to most of the units being in the inner and middle ring suburbs. But as you say, there's not much relief for tenants.
No, there's not, Michael. And we've discussed some of the responses from government to these issues, and there's nothing really they can do other than probably make things worse. I just was reading something during the week, last week, that similar to a lot of governments and similar to propositions that have been put forward in this country, the left of centre Scottish government introduced rent freezes last year. I won't go into the details of it, but that's now unwinding at a rate of knots because it's actually exacerbating the shortage of rental properties there. And the Greens, who were part of the charge towards rent freeze, and we know that's happening here, are now being very quiet on this issue, and they're being confronted with significant legal challenges to these policies because they were part of it with the previous administration. That's an early rent freeze policy that's been tested and found significantly wanting, to the point where they're now taking it away. And actual tenants are saying that it's actually making, over the medium to longer term, rents more expensive, putting tenants under more pressure because they are still worried about losing their tenancy. And many of them are more fearful of asking for repairs or work to be done because they don't want to lose their tenancy. So it's, you gain in the rent freeze in the short term, but in the long term, you end up paying more rent and having more outgoings in terms of what the cost of your accommodation is. So I would suggest that the governments of perhaps Victoria, of the governments of Queensland, have a look at the Scottish model in terms of a model that's actually been initiated and what's happening there now, because it's not good news for those policymakers that thought it was going to be a panacea for higher rents. In fact, it's working the opposite. And the point, Michael, is also it's creating a shortage, an increased shortage of rental properties going forward, which isn't being soaked up by those, moving into rental properties as owners. It just means fewer rental properties per just full stop, and people having to live somewhere else, and where is that?
We've seen in the past how government interference or RBA or APRA interference in the markets creates all sorts of unintended consequences. What I find interesting, something you brought up today and in the past also, is the potential of legal implications and consequences. What right does somebody have to stop me if I run my business charging more for my dog wash or for my sausages? On the one hand, stopping me charging more, but on the other hand, increasing my costs.
Yeah, particularly if you can justify your increased income position with increased costs. That's the whole point. If you're gouging, okay, that's an antitrust issue. If you can't, and this is what the Greens have gone very quiet about this in Scotland at the moment. But as I said, this is a more mature policy position. But of course, this is just the argy-bargy of the day-to-day political machinations that are just trying to come up with an answer to what is clearly a supply problem, not a demand problem. And it's just a lesson which I don't think will be heeded. I think the Premier of Victoria has made some really narky sort of statements about this. It doesn't sound like he's, looking for a solution. I don't know, but we should expect these sort of things from the political side of the equation. But at the end of the day, it's not going to put an extra roof over somebody's head. And at the end of the day, it'll just mean we head down maybe, unfortunately, the box communities of the west coast of the US, and which I noticed now governments are going in and forcibly removing these temporary communities because they've become such a problem going forward.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Now, every Sunday on LinkedIn, you report the auction clearance results for our major capital cities. You do it in great detail, not just for Melbourne, but you break it down by regions as you do for Sydney, for houses and units. So that's very detailed, and we report it in Property Update. And when we look back at the weekend just gone, the auction clearance rates were strong again. Yep. We're still in the middle of winter, and there's lots of other distractions, but the market's got quite some depth, Andrew.
Yes, Michael, we're a little bit down on auction numbers in Sydney and Melbourne, but that's coming from what was a very strong weekend the weekend before. Still over 600 auctions in both Sydney and Melbourne on Saturday. Clearance rates remain just about the same in both Sydney and Melbourne, in the mid-70s. Michael, still a pretty good result there for sellers. If you're getting 7+, your chances are 7+ out of 10 to sell your property under the hammer of a Saturday. That's pretty good odds, I think, and that's why we're seeing higher prices. Brisbane down a little bit, but there was certainly a big decline in the number of auctions in Brisbane, so quite a weekend there. Adelaide, a similar result in terms of the number of auctions. The clearance rate's up a bit, but that with lower reported auctions, you tend to have a volatile result. But Adelaide has always clearly been a leader, or if not the leader, in auction clearance rates, strong auction culture there. And Canberra certainly picked up over the past month and continues to produce plus 70% clearance rates. Good results there. And we can see when we compare the position over August, of course, we've only had one weekend to August last year. Melbourne and Sydney are well ahead of where they were a year ago. In fact, every capital city is well ahead of where they were a year ago in terms of auction clearance rates. And just talking about August, Michael, this is obviously the last month of winter, and this is when we start to see just the green shoots of the spring selling season, if I may say that, a little premature perhaps. I track new listings that have come through on a daily basis, and over the past week, Michael, we've just started to see the trough of the new listings market on a week-by-week comparison basis. So new listings are now rising consistently, and they have over the past week on each day. So we are now seeing properties coming into the market. Now, a lot of these new listings that are being reported, auction listings, and that's what's driving the uptick. People who are now planning to put their properties up for auction early in September, and that information is coming through now with higher listings. So it's been a characteristic anyway of the markets that we've had a surge in listings, an unusual surge in winter listings over the past month, Michael, in our auction markets. And it certainly can't be from fear of wanting to make the most of the market, because markets are rising consistently off the back of a very strong economy. And guess what? Interest rates are on hold. So it's like, really.
Now, interestingly, there's so many different ways of looking at data. So some people will say, hey, new listings, people are hopping out of the market. They're getting scared. They're not wanting to hold on. While I know that recently there was a report about how many distressed sales there were, mortgagees in possession. And I recently that over the last 6 months in Sydney, there were 347 distressed sales, not 347,000, 347 in a 6-month period. And again, the news could have said, look how few distressed mortgagee in possession sales there are, but they took the other angle. Oh, look, it's increased.
Yes, Michael, I guess there are dandelion statistics, but you can manipulate it to suit the storyline, but it isn't very many, is it, Michael?
No.
And we're coming from higher prices, and this does reflect, perhaps we could say, if it was a generalised, rise, the impact of higher interest rates, and a year ago, of course, lower prices. But it is only a very small number, isn't it, Michael? And perhaps the other point that's lifted it has been the end of the COVID stimulus support packages, which meant some households just couldn't use that to support themselves as that's completed now. So it's probably a good news story, Michael.
Well, the good news story for the week was interest rates are on hold at present. And so that's going to give confidence. 2 months in a row of steady interest rates working its way through the markets. Look forward to catching up with you next week and seeing what else is in the news.
Thanks, Michael.